Looking to establish Hong Kong as a viable location for investment funds to domicile, the region's Securities and Futures Commission, SFC, in 2018 introduced the Open-Ended Fund Company, OFC, option in the city. An OFC is an investment fund structured as a limited liability company in Hong Kong. It can exist as either a standalone fund or an umbrella fund, with the latter capable of setting up an unlimited number of sub-funds. OFCs offer several attractive advantages for investment, which has made it a popular choice for investment fund managers. Let's take a closer look into what an OFC is and why it is attracting investment fund managers. Investors nowadays often prioritize flexibility, seeking investment solutions that allow them to easily enter or exit the fund. OFCs are a perfect fit for this need, as they use an open-ended structure allowing investors to buy and sell shares directly from the fund at the current net asset value. In addition to flexibility, OFCs offer diversification, particularly those set up as umbrella funds. These umbrella funds can house multiple sub-funds with diversified portfolios of assets under one legal entity. Each sub-fund can pursue a different investment strategy, allowing investors to select funds that align with their investment goals. From an investor's perspective, compared to investing in a single asset, this structure effectively reduces risk. In Hong Kong, the government offers tax incentives to attract more investors. From a tax perspective, Hong Kong does not levy capital gains tax, or withholding tax, or dividends. As a result, investors benefit from profit tax exemptions. In addition to tax advantages, the SFC has implemented a grant scheme to subsidize the setup of OFCs. This scheme covers up to 70% of eligible fees, providing a significant incentive for investment funds to domicile in Hong Kong under the OFC structure. This initiative has effectively encouraged the adoption and growth of OFCs and will be in place until 2027. The SFC provides a one-stop streamlined application process for establishing an OFC. Applicants need only to register the OFC with the SFC, which then forwards the necessary documents to the Hong Kong Companies Registry. The streamlined process reduces administrative burdens and simplifies the setup of an OFC. For investors seeking diversified portfolios, investing across multiple platforms can be troublesome and costly. OFCs provide a unique advantage by pooling investor capital to achieve economies of scale. As an OFC grows and attracts more investors, costs such as labor expenses are spread across a larger pool of assets, resulting in significant cost savings. Additionally, many OFCs operate under an umbrella structure, managing multiple sub-funds under a single administrative platform. This reduces the duplicated management costs and enhances overall efficiency. Aiming to also attract investment funds, neighboring Singapore in 2020 launched its Variable Capital Companies, VCC, a scheme similar to Hong Kong's OFC. While both are designed to attract fund managers, there are some differences between the two structures. Both Hong Kong and Singapore are governed by robust financial regulations, providing investors with confidence that their investments are managed within a secure and legal framework. However, the difference lies in the number of registered companies. According to data from the Accounting and Corporate Regulatory Authority in Singapore, as of June 30, 2024, the VCC scheme had achieved 1,096 registrations compared to 371 registered under the OFC in Hong Kong. While this may suggest that VCC has attracted more fund managers to Singapore, the growth potential of OFC should not be overlooked. Newly registered OFCs have increased by 144% year-on-year, according to data from the SFC, signaling a strong upward trend. One key driver of this growth is Hong Kong's grant scheme, which subsidizes up to 70% of eligible expenses for setting up an OFC. In contrast, Singapore's grant scheme only covers up to 30% of the qualifying expenses. This generous subsidy provides a competitive advantage for Hong Kong in encouraging the setup of OFC. Moreover, Singapore's grant scheme is scheduled to expire by early 2025. While Singapore's VCCs currently hold a larger share of the market, The increasing adoption of OFCs and its attractive benefits suggest that Hong Kong is ready to rise as a formidable player in the investment fund industry.